Welcome to Stockwatch with me, Simon Brown, and joining me to unpack your stock-related questions today, David Shapiro, Sasfin Securities, Devin Shutte from Robert Group. Be sure to send your questions through via email, stockwatch@bdtv.co.za, SMS 41392, or on Twitter at BusinessDayTV, #Stockwatch. Gents, appreciate the time. David, I know I'm slightly getting into your pick later, but all-share index over 100,000 points. My question to you is, what was it when you started in the industry?
We never had an all-share index in those days. I think we used to have a Rand Daily Mail. Somewhere along the line, they started an index, which I think was then eventually, scrapped. I think the all-share index only came into being in the 90s.
That's what I think.
If I'm not mistaken.
Yeah.
Yeah. But I mean, 10 years ago, it was 50,000. So it's doubled. It's actually it had a protracted 4 or 5 years, and it's only recently that it's, really gathered momentum as well. And also, I think one of the factors as well, Simon, is that, which we're not getting at the moment, has been Rand weaknesses, which has been another big driver of some of those gains that we've seen more recently. But, I'll take anything. I'm just saying it's, we've got world markets that are just, bounding ahead at the moment. Yeah. So we'll talk about that later. But I mean, we're in a very strong upward trend. So the bears do not phone in.
Devin, I mean, and 100,000, it's a nice number, it's a round number, it's a psychological number, it's all of those things. But it's also a very high number. And what we have to say, I appreciate gold's been helping us, PGM's lately to the party. I mean, is it a level which you look at and you scratch your head, or are you comfortable in saying it kind of reflects what we see on the ground?
Yeah, I mean, I won't look a gift horse in the mouth. 100,000 sounds great. We're adding another digit to it there. But yeah, I mean, I think you touched on some of those things, Simon. This has been driven. It's not a broad-based rally that we've seen over the last 12 months or so. It's really been driven by precious metals, a couple real heavyweight dual-listed things. The SA Inc. companies have started to catch a bit, but if you kind of look at valuations across the board, they really, really still are not very expensive. And so, yeah, I think potentially there's still more to go. But, in this wild and crazy world we're in, who knows? But, on a day where, we've agreed to a budget in Parliament, our inflation's not looking too high and we're breaking 100,000, I think could take the wins when we get them.
We'll take that 100%. You mentioned inflation, 3% inflation for June. There's been a lot of criticism about the NPC and that they are being overly hawkish. I mean, have they made policy error? Because we're still at 3%, and that's for the midpoint of the year.
Yeah, so look, I mean, the real, our real rates are still incredibly high. I think if you pull the lens back, the objective quite clearly here is to move that inflation target lower. So they've got a window of opportunity right now. My sense is that is going to happen, and it's probably going to be at that 3%, maybe 3 to 4% range. Not too sure yet. So what that does mean is, this print gives the SARB the opportunity to cut next week when they meet. I do think they won't be as dovish as last time. You remember some members of the MPC even voted for a 50 basis points cut. My sense is we're going to get a 25, and that might be it for now, which, for the average consumer is somewhat disappointing. But I think longer term, it bodes well for us. You're seeing inflation expectations continue to moderate. So I think kind of wrapping that all together, it might be a longer pause, but given where inflation could go, they may resume cutting, and rates might actually end up lower in the long term with that lower inflation target.
David, your take? I mean, certainly the view of SARB and I think National Treasury is that we're going to see 4 and maybe even as high as 4.4. But so far, I mean, that's been their view for half a year, and it's nowhere in sight.
No. And you've got a Rand at 17.55.
Yeah.
You've got Trump doing deals, which he's going to continue to do. We haven't seen tariffs showing its head or exposing any kind of inflationary pressures, maybe yet, but it's not there. The market's saying this is nothing. The market's saying let's move ahead. And I can't help but get excited by the market. It's not asymmetrical. It just doesn't go up in a straight line. That's how markets work. They are volatile. But I think underlying this, there's a momentum. that's even exciting me. And when I look at the commodity markets and the resource markets, there are things happening there, and which you can't ignore. We can try and fathom out why platinum's gone up to 1,400 plus. It's there. I don't know what's taken up there, but it's there. I'm not going to fight with the price. And gold's wherever it is. And I'm the cynic of all cynics when it came to commodity prices. But even the iron ore companies are picking up copper. A lot of things are happening. So I'm a person who likes to look at the tea leaves and see what the weather's out there outside. I don't have to take an umbrella to work every day. Sometimes the sun does shine. So I think the sun's shining on us,
Yeah, okay. No, we like the sun. We definitely like the sun. David, let's stay with you a moment. Mr. Price came out with a trading update this morning. It didn't look so ugly, except the market thought it was ugly. Well, what's the worry?
Well, Devin, said something, quite, specific about the JSE. The JSE is being driven up by outside companies. Naspers up like 5% today. Why? Because Tencent's up, 5% in Asia this morning. So that's the kind of drivers that we've seen. I see Karooooo up here, very good results. But down below in the SA economy is battling along. Commodity prices might help us there, but we're not there yet. So I'm still very skeptical on SA Inc., which is the retailers, and even the banks are struggling. But if you go into the big international businesses, that's where our drivers are coming from. Eventually, hopefully it filters through here. But for the meantime, that's it's a tough area. I'll just qualify it by saying, Devin said it's cheap. They are cheap, but there's reason they're cheap.
Devin, your take? Certainly it was a 300 Rand stock towards the end of last year. And to be clear, it was a 150 Rand stock at the beginning of last year. Mr. Price, your thoughts on the update on the stock itself?
Yeah, I think the update was credible. I think given the environment, it was good. Comparable sales growing by 3%. We understand it when the economy is growing by less than 1%. And what it looks like the retailers are really doing now is it's a market share game, isn't it? Where they're looking to try to take market share away from each other. Mr. Price has been on the winning side of that, not by much, 10 basis points they revealed to us, but you're not seeing that massive growth uplift across the board that rises all ships. That organic growth, they really are trying to eke it out, getting more efficient, buying into other groups, and our management teams in South Africa have done incredibly well at generating earnings growth in a low growth environment that way. But if you really want to get the exciting growth, unfortunately, we're just not seeing it in our domestic economy yet.
Yeah, but I like your point. That they are managing to grow in what is a tough environment. Imagine if it wasn't so tough. Devin, let's stay with you a second. David mentioned the Karooooo results. I chatted with Zach Callisto this morning. A good set of numbers, momentum continuing through that business. Is this one that you've had a look at? Have you got thoughts on Karooooo with 5 O's?
Yeah, as many O's as you want there. Yeah, so it's a really good little business. Their expansion and their NASDAQ listing, kind of the global aspirations have really done well for them. Southeast Asia was a particularly strong spot for them in these results. But, when you're getting this double-digit subscriber growth, double-digit revenue growth kind of season in, season out, that really is consistent delivery. The business model helps, right? They haven't been able to push through price increases, but it's that annuity and client growth together that really gives you this kind of stability and high profitability. So, yeah, that done particularly well. I would have thought this type of market would be saturated by now. There's a number of players in it, but every reporting season it just seems to surprise. So, yeah. Well done to them and market really liking those results.
David, Karooooo.
It bypassed me, and I was not as cynical. I looked it wasn't even suspicious because I didn't know this business. I knew Mixed Telematics, I knew the Eltron companies, but I didn't know this one. And CarTrack we knew was listed, but they keep, as Devin says, double digit all the time. I suppose you have to have a tracker, otherwise you can't get insurance. Buy a new car, you got to put a tracker in, otherwise you can't get covered. So I suppose they've got a ready-made market thanks to our very high crime rates here. I didn't know that in Singapore maybe that cars are being stolen or wherever they operate as many as us. But credit to them, they're producing the results.
Yeah.
And there've been a lot of backers, in South Africa who said, watch this company. Our good friend Franco Lorenzani used to nag me every day and say, look at this. Do you want to meet Zach? And I'd say, nah, but I was wrong. It's been...
Singapore is more actually commercial, and that's, I think, maybe the story. But also, if you buy a Roadster, you don't need a tracker because it's not going to get stolen. You're going to crash it. David, Jubilee Metals. You promised to quickly do some checking. Question coming through around Jubilee Metals. I mean, they do chrome. They've got some copper, some challenges there. They're exiting their platinum. I mean, these really are the small stocks, I suppose, in the mining. It's a tough space.
We don't know much about it. That's why I say it's just one of these miners who happens to be trading there. We know their code. I know their code is JBL, but to be honest, I've never gone deeper into it simply because, marketability and what's the word when you notice a company, visibility has been very low in this particular one. So it's one that we don't pay much attention to. So I can't really give you a view on this one. But it's in chrome, it's in platinum, whatever. Yeah. I don't even know what its performance has been like. Well, so I apologize.
They were exiting some of their platinum, which might also upset people. David, as we were coming back there, you were mentioning Vodacom, so you're in the hot spot. Thoughts on Vodacom?
When I looked through the numbers this morning, and I must admit, very superficially, I always go and look, and I saw that volumes are up or subscribers up 3% here, revenue, whatever that number was, also doing very well in Egypt. I was quite impressed. And I mean, the trouble is when a trading update comes from Vodacom, it goes into reams and reams of explanation that you got to plow your way through, which I haven't quite done. But I thought, judging from its performance, that it would be up 5%, but I look at the market now, it's trading down 5%. So I'm not quite sure what was in all those, the commentary that actually got people to sell it down 5%. But it is one of the worst performance in a market which is quite strong today. So I've got to do more work there, but it surprised me. But this has been a strong performer up to now.
Devin, do you have more insight? Because I got to say, the headline numbers they were talking about look good, but there's always an asterisk, and you've got to go and read those notes and get a sense. Devin, Vodacom for you?
Yeah, there's lots of asterisks from the looks of it, yeah, and I'll be honest, I haven't gone through them in an enormous amount of detail. I think, if you look at group revenue growing at 10%, that sounds good. I think maybe the weak spot was really South Africa, which is half of that, only grew at 3%. And then other regions like Egypt and that's kind of doing some of the heavy lifting. So I think that would be a concern for them. That South Africa is just kind of flatlining to some extent. So yeah, it's not like consumers necessarily are going to be paying more for these services. So they have to find ways to grow. Generally that ARPU, that revenue per user number, is coming down. Data unit usage is going up, but those revenues are still coming down because of the cost decreasing. So it's a tough old space, massive capex required. I think maybe just the South African performance is what's weighing on the market today.
Yeah, and it is.
And I see MTN is also down today. So I don't know if there's a connection there, whether something came out in the report which just shows that things are slowing down. And yet, when you look at companies like Blue Label or Telkom and that, they seem to be on another trajectory. So I don't know. I'm nervous of that area simply, as Devin said, so much capital expenditure has to go in. It's such a tough area. You're fighting for new customers. And as I keep saying every week, everybody wants their product for nothing.
Yeah, and it is.
You don't want to pay for data.
It's huge capex, and every time I renew my contract, I get more for less. This is not a fun space whatsoever. Devin, a question coming through around Prosus. Is there still opportunity in the stock? It's been running. It still is. Prosus is still pretty much Tencent. Yes, there's the other bets, and they're looking better. But Devin, your thoughts on Prosus?
Yes, I think long term, I'm still very constructive on the counter. you're exactly right. Tencent is still the behemoth. It's nice to see those, non-rum companies starting to turn profitable and add there. But I think, look through to this, look through to Tencent, look through to what's happening in the Chinese economy, which, you and I have chatted extensively about this, is looking better and better. Some really strong GDP numbers coming through. And what was interesting for me on the macro data coming out of China in the last week is that they've got a metric on investment flows. That's kind of just how people are investing in the economy, and that's up 40% year on year. So you're definitely seeing they don't have an inflation problem. They've got the ability to stimulate, and they're growing at 5.2%. So put that all together, and when you've got such a ubiquitous service offering like Tencent does have there, I think there's still a long runway to come.
Yeah, I remember that. I think what was it, NVIDIA was more than double the entire Chinese tech sector. Probably, in fact, even more with NVIDIA at now, 4 trillion. David, Prosus?
Well, it's Tencent. I don't want to be, think of any of the other food delivery or that. Those don't make any difference in my life. It's going to take a long time before they can contribute anywhere close to what Tencent does. But I see also the authorities easing up, starting to allow more games coming through, which is also a concession, which is very important because the Chinese know how to use their cell phones. They use it at significantly more than we do. They're much more adept. It's very much part of their lifestyle. So, gaming is massive, and you've got a huge population. So I've never been a great fan of the Naspers Prosus, but I'm not going to sell them now, and I still think they're going to continue to drive our market up. And it's not going to be the chaps on those bicycles delivering pizzas. It's going to be Tencent.
It's going to be Tencent. David, a great question coming through, and I think I know the answer, but I'm going to send it to you. Sibanye-Stillwater, 45 Rand on the JSE, but $9 in New York, which is about 145 Rand. Is this an arbitrage, or is there a ratio between the stocks? I imagine it's probably a 3-to-1 ratio.
There must be. No, but it's the same shares that it listed. That's odd. You've trapped me here, as Brian Hirsch would always say. This is a quiz kids question. You can't stump the quiz kids. That's a bit too old for you, Simon. Back in the youth, they have a radio program called Quiz Kids. But I'm not sure why the ratio is, because I think that unless there's an ADR that is quoted there. But I assume that it was.
It is an ADR, and it must be a ratio story.
It must be at a different ratio.
Yeah, because otherwise you're buying in Joburg, you're selling in New York, and you're just making $100.
It's not fungible. Then it's not a fungible, 1-for-1.
Yeah.
But I'm sure that's the ratio. Yeah.
Devin, question coming through around Nedbank. Bought it. It's been slipping since then. Is Nedbank still worth holding on to? Would you hang on? David was being a little disparaging about our banks earlier. Devin, would you still be looking at Nedbank?
Yes, I think so. I think there's enough of the kind of macro risk and low growth environment priced into these banks at the moment. On the price to book ratios, they really are undemanding. I think these banks are still managing to find growth. I don't know where. Now we've got the 5 big ones and the digital competitors all coming on board. But yeah, they're increasing their revenues or non-interest revenue, which has been great to see. Their credit impairments are improving. They've got a very big property loan book, which maybe with a couple more cuts in interest rates will continue to improve. So overall, I think if they're in there, it's probably likely to just ride it out. But it's not going to be a straight line from bottom left to top right. We're going to be in with the vagaries of our politics, global trade, and local growth. So put that all together, and it's a bumpy ride. Yeah, I actually just zoomed out to a 10-year chart. It's pretty much sideways over a decade, but a massive recovery since 2020. David, you were saying nasty things about our banks. Oh, it is tough.
They're not nasty. They just don't lend money. That's why. They just mean as anything. You can't get a loan from them. They're very well run. Exceptionally well run. The reason I'm negative on them is simply because of the underlying economy. There's no action. There are no new big projects. There's no M&A. Nothing's really happening in the underlying economy, and for that reason, it makes it difficult for banks. They can take small margins on loans and that, but I think they're incredibly well run, and I wouldn't criticize them on that. But the other thing, Simon, a lot of things are happening in the world financial markets, in settlements. I'm not a Coinbase person, or what do they call them? The new coins.
Crypto.
Help me out here. They backed by the dollar?
Stable coins.
Stable coins. Thank you, Devin.
There's so much happening at the moment there that are going to challenge the way that banks operate. The way that they transmit money, settle things, and that. So this is an industry that's got to have to rethink and modernize and change its whole ways, and that. You've got private credit out there as well. So banks have got to become a lot more innovative. Yeah. Just interesting here, while you were there, while Devin was talking about Nedbank, I looked up that ADR in the United States. What's quite incredible is that Sibanye ADR has tracked the S&P over the last kind of 6 years.
Oh, wow.
Which is yeah.
Okay.
For whatever reason, which is quite remarkable. So they started at the same point. They're at the same point at the moment. A lot more activity or volatility in Sibanye, but the end result is the same. You cross the finishing line together. But there is an ADR there, and I think maybe that explains
it's the ratios. Yeah. David, quickly before we go to stock picks, question coming through. Ask David about Sasol. Has his view changed? The update yesterday, to me, I got to the part around the earnings update and they said, we'll get back to you.
Yeah, a lot of issues. And you see, it's not only in South Africa, it's international as well, with their chemical divisions and so on, closing operations and that. This is a company you're going to wait for a massive boom in commodities before you kind of, do well there. A lot of structural issues there as well. So for the meantime, there's plenty of other places to go to.
Yeah. Devin, I'm going to go to stock picks with you. You're going with Invicta.
Yeah, that's right. So, despite us bashing the domestic economy, there's management teams that manage to navigate it well. Yeah. And I would argue the market's underappreciating this business. Trades on 4 times earnings. It's a small industrial company, and it specializes in auto consumables, agri and auto parts, capital equipment, that type of thing. But it's got a really impressive portfolio, about 400 brands there. And what's nice is they supply and service these industries, all the spare parts and that. So nicely vertically integrated, and they've done some really good work recently, as we were chatting about, and cleaning up their capital structure, getting rid of the prefs. So I think the future looks quite bright for them. Well-run little business, and they're expanding into sectors and in geographies where they have the expertise, and I think you're going to get some genuine growth out of them.
Yeah, and I remember chatting with Stephen Joffrey when results came out. That pref, as you mentioned, that's 70 million a year that drops to the bottom line for them. It's a big number. Yep. David, your stock pick is everything.
Yes, I just like markets. And I think that wherever you are, if you're in any of the indices, you're going to do well, whether S&P, whether you're on the local market as well. I think we're in for a very strong second half. So, to try and find one specific share that's going to outperform all of that, no, just go with them. Go with equities. Don't look, and you know what else is there? Simon, I have to mention this as well.
Yeah.
The property market is starting to pick up. Every day I watch and there's a kick up, and that, it's early stage, but smart money is going into property. And it's not only local, it's Hammerson's and the Shaftesbury and all of those are starting to show signs of kind of, picking up. So got to do a lot more work on it, but, things seem to be happening there.
Well,
green shoots. What do you want to call it?
Green shoots. We'll take it. I hope everyone's listening. When you say we're going to have a strong H2, we're up 18% in H1, so I'm very keen to see what things are in December. But that's all for Stockwatch today. Thanks to our guest, David Shapiro, Sasfin Securities. He's going with everything. Devin Shutte, Robert Group, Invicta. Up next, the close. Stay watching.